Okay, hey folks, it's Wednesday, the 9th of March, just 10 minutes past 10 at the moment in the morning in Dublin. And we're here with Lewis Etherington, one of the members of the Dugan Capital Pro Trader group. And so Lewis and myself were chatting. Good morning, Lewis.
Good
How are you
morning.
doing?
Good, thank you. And you?
Yeah, good, good. Yeah, good. I just wanted to kind of record a conversation that we were kind of about to really get into. Sorry, hold on, let me stop the pin. Let's see. My co-host, and I just want to unpin there we go. Yeah. And I just wanted to get into a chat about, we were going to get into a chat about the economics of, gaming, tokens and NFTs and all sorts of stuff. And so I just thought it'd be great for us to get on a chat and, really get into some of this. And I know Ellum is very active on the crypto space, as day trading quite a lot of these cryptos. I know you're kind of swing trading a lot of cryptos, but then Ellum's getting into Metaverse land trading. You're looking at trading game tokens, and so yeah, let me know what have you been up to?
Well, more recently, my focus has been a lot on the concept of node projects. So, to my understanding, they operate kind of similar to a hedge fund, but in the crypto space. And these developed initially from, obviously, you've got Axie Infinity is obviously one of the biggest gaming crypto spaces, as well as I think what a lot of people don't realize is the digital representation of money within gaming has been around a lot longer than this recent past 2 or 3 years crypto boom. In all of your Call of Duties and all of your online gaming that either you play, your kids play, whoever plays, you've got this online currency that you can go online and purchase for real money, and that allows you to purchase skins or items that all have utility. And I think what I've been trying to look for the most is, what has the most utility within that industry, because there's been an awful lot of people that can come along and think they can make a quick buck and generate this new token, generate this new item and say, hey, this is what it does, believe me, pay me for it. But I think it's become few and far between to find items and tokens that genuinely hold real world utility that's quote unquote provable, if that makes sense.
Right. Yeah. And so I mean, it's great. Yeah, there's been healthy economics inside of all these games, which are now, we call them the metaverses, right? And so I mean, I could list off, well, I can't actually list off too many games because I'm not a huge gamer, but I am fully aware of these, like World of Warcraft. There's a healthy marketplace there. And so and this is something that I talked about with Alan before and some of the other team members is, there is value out there, Axie Infinity, like there's a very healthy marketplace there, with the tokens, exchanging and trading the avatars. But it's really hard to find that utility across, not only kind of the NFT space, I've got my fingers burned there, but now it's more of a metaverse conversation. And where are you seeing value, if any, at the moment, or core utility value to gamers?
Well, I guess I would say that depends on how you define the term utility. What are you looking for out of this token? What are you looking for it to give you back? So these node projects that I mentioned before, a utility that they provide is actually daily rewards. So the buy-in for those is different for different projects. A primary one that I'm involved in is Thor Financial. And so you go along and you buy, you have to, through a decentralized exchange, go and buy X amount of their tokens. For instance, I think 12.5 tokens for a Thor node. You go to their platform and you give them your 12.5 Thor tokens. And the drawback here is, with Thor in particular, these tokens are burned. So say you spend $1,000 on 12.5 Thor tokens, that is $1,000 down the drain, as it were. The utility that provides you is they pay you daily rewards. So you get, off the top of my head, I think it's 0.144 Thor tokens per day. So what you have paid, your 12.5, it goes, I believe 70% of that goes into their treasury, and they go off and make investments into things like they've recently started up a Phantom validator node. Not Phantom, sorry, they're on the Avalanche network, Avalanche validator node. So the buy-in for that is tens of thousands, hundreds of thousands of US dollars for these nodes that verify transactions across the different layer one blockchains. So for your average person, not really feasible to go and buy into that. So you're paying the small amounts to get a small amount of reward. So the utility through Thor Financial is you've got that daily passive income, the buzzword that everybody loves. That is your utility, versus stuff like Axie Infinity is the utility within the game. And you can then earn the tokens that you can obviously pull off the platform and go and sell if you want to. So there are different definitions of the word utility, different types of utility, depending on what your given consumer is looking for.
Amazing. Right. Yeah, I never thought about it like that. I was aware of there were bonds in the crypto space, and that sounds more like a bond play where you're kind of giving over your Thor tokens, and then they hold so they're burning 30% of them, and then
okay,
and
sorry,
then,
I should have been more careful with that phrasing. I say burnt as in you cannot sell your nodes on currently, and there is a caveat to that. So I put in, say, these 12.5 tokens. I can't get those back. At best, I can earn rewards, my 0.144 per day, until I get to 12.5, and then I can go and sell those 12.5, and provided the token price is the same, I will get my $1,000 or whatever it is back.
so it's like a bond. So they're paying you a coupon. So you give them the money, and then they pay you a coupon rate, and then at the end, are you getting made whole again plus your interest payments?
So that will now operate ad infinitum. So I can generate my 12.5 Thor tokens, and then if I wanted to take those out of the project and go and liquidate them to get my initial investment back, I could. Or I can take that, recycle it back into the project, start a second Thor node. Now I've got 0.144 token per day twice being generated. And so there are incentives to leave that within the protocol. There is a claim tax, I believe on the Thors it's 8%. As well as if you keep your money within the protocol and recycle it back into another node, you skip the claim tax. So it obviously incentivizes you to keep your money there. The slight caveat I mentioned earlier is along their roadmap, they have two things in particular. One, obviously, so as that scales up to hundreds of thousands of nodes, it very quickly becomes unsustainable unless you have a treasury of hundreds of millions. If you're paying out these tokens day in, day out. So they have discussed and yet to put a timeline on a node cap where they will say, no more nodes being created. What's made is made. Alongside that node cap, they have said they will release an NFT marketplace on the Avalanche blockchain, and each node will be tokenized. So you can then go and sell your node as an NFT. And that's the one caveat to potentially being able to take your initial investment out. But the theory being that because no more can be created, the value should skyrocket.
Now, this all reminds me of a short guy in the US called Bernie Madoff, whereby he would take your money and he'd say, I can do you 10% a year. And then it comes to the end of the year, you get paid 10%. Meanwhile, Bernie's made my 10% by taking in money from the other guy, and he's robbing Peter to pay Paul. And I'm, coming back to the cap here, it's like, well, number one, I'm really interested to know where they're able to pay, where are they getting the revenues to pay you your kind of token payout, your what 1.44. I don't think that's too much of a problem, but ultimately then, where are they generally going to address that payout when they have people doubling down that don't want to pay the 8% withdrawal tax? How is it sustainable in a way? Like where are they getting the money from is my big question.
Sustainability is, I think, the key word. And I'm involved in two of these projects, and I've maybe got my eye on 8 or 9 others, and every single Discord I'm in, tweet I see, they're all querying sustainability. And ultimately, the answer is, so obviously once you reach a certain point and you put in the node cap, obviously everybody that has paid in however much money or tokens or however you want to see it, all goes into the treasury, and you've got a treasury of I've spent 500 grand opening a validator node on this blockchain, and you've got investments in this I've forgotten the stable coin, and you can generate APY on that. And so you've got a various treasury doing things like that. You've got the claim tax for the people that do want to claim. They have recently introduced, as of Sunday, March 6th, just gone, a maintenance fee on the nodes. So monthly, I believe I'll pay $20 a month to just allow your node to keep ticking over. So
Wow.
yeah, various places on top of with the NFT marketplace that I mentioned. Obviously every transaction can be taxed slightly. And the other part I mentioned of the roadmap was a play to earn game that they've supposedly got in development. They have not spoken much about this.
Okay.
But yeah, the theory being that both your nodes and your NFTs will provide you in-game utility in some form. It might be extra benefits in game, or the capability to access certain areas.
So which game? So there are games with like a big fan base and user base attached to these projects, I presume.
No, so the games have not been developed yet. This is a game long term. Yes.
So the project I burnt my fingers on an NFT was they only sold half of the allotment of NFTs, and then they fell shy of basically making enough money to continue with the development of the game. And I think the streets are littered with NFTs that had a big fat game project behind, in the background for, to kind of create the utility concept and the reasoning why you should buy that NFT or invest in that project. And then everyone piles in, a lot of hype. Gary Vaynerchuk or whatever his name is, big on this, and he absolutely got toasted. And then the projects just don't happen, or currently the projects all seem to be either on ice, or the admins on these projects have disappeared, like non-chimps. It's totally wasted now. The admins are they're not, I don't think they're even in the Discord anymore, the official Discord. So as I said, I kind of play devil's advocate to a lot of this stuff, because I think there's a lot of finger burning to be, that's going to be done around. I mean,
yeah, and then you're 100% correct to do so. And all of these are questions you have to ask yourself before you even consider putting your money into these projects. So Thor in itself started out as a fork of a project called Ring Financial. Anybody that is in the node space will have massive alarm bells going off when I mentioned Ring Financial, because they were, I believe it was undecided whether or not it was straight up a rug pull from the developers, or potentially they were hacked. Talks of going off with something like 90 million US dollars and leaving people horrifically burned. And
wow.
Thor branched off their contract from that, and obviously sort of made some changes. And as I mentioned, March 6th, just gone Sunday, launched a V2 contract, which establishes them as no longer a fork of Ring. They are sort of their own independent project. And what's, I have to say, I think makes Thor stand out from other node projects, and I think this is something you should look for a lot in the crypto space, is stuff like KYC, know your customer, contract audits, and people willing to be doxxed, when you sort of come out in public, put a face to a name, things like that. With Thor, a large part of the development team, as well as the community manager, who goes by a tag of Loki, because it's all Norse god themed. I have to say, thus far, they're the most quote unquote doxed projects I've come across. Okay. Not 100. I couldn't list the names of all the developers, and by all means, I'm not saying just because I have a face that this guarantees the safety. There's a risk to everything in investing, let alone when you get to the wild west of crypto. But sure, on a scale compared to others I've seen, I'm more trusting, might be a bit too kind a word, but Yeah, I am invested in Thor, so I've been happy
Okay.
enough.
Okay. So another crazy project that, well, API wise was absolutely mental was Avalanche and Time and Meme.
Yep.
So I think I did a video on this a while ago, but the APYs, the daily on it was something like 3,000%. I think the year the APY
Was it?
was like
Yeah.
70,000.
80, I thought I saw 80,000.
80, yeah, yeah, I think I saw 80 as well, yeah. um and I was just, I don't know, I mean, in the washout that we've had over the last kind of, what, say 3 months, um I haven't really checked back in on where that is, but I presume it's a bit of a washout, on people who were, I mean, I know guys who were trading that they were 60 grand into the project, and they were, I mean, they were making about 400 a day at one point, and they were just plowing in, and I was going to get in there, and I just couldn't get onto the network. But I was like, well, what's the underlying risk here? And they're like, as long as time stays high, everything's fine. As long as the value of time stays high. I don't know if you've checked in on that recently, have you?
As I never got involved with Time in Wonderland. I remember sort of when it all kicked off, and the main story I heard was that one of the head of the treasury or something ended up having a really shady past from 2008. He had a criminal record and stuff, and people hadn't realized that it was him in charge of the money. um,
Okay.
Last I did check in on it, there was debates between just let it die, essentially, and so the community manager, who I believe by name of Danny, had some massive fan base from, I'm not entirely sure where, but that fan base came out of the woodwork and said, look, Danny, we believe in you, rebuild this project. Okay, you messed up. I haven't seen where it's gone since, but there was about a 50-50 between, this is ridiculous, I've just lost, yeah, thousands, tens of thousands, hundreds of thousands. People had ridiculous amounts of money in that, because, and the issue was, and this is why I'm not involved in any of these projects, that where you invest your money and they give you back a token,
Yeah.
a sort of, yeah, an extended token to represent what you put in. You can then take that and then stake it elsewhere, and then you sort of, you go link to link to link to link, and it's so house of cards. I can
House
just
of
see it all
Cards,
tumbling down.
absolutely.
I'm not touching it.
So my question was, all right, cool, you're making insane amounts of meme for staking your time, but then how liquid is meme? Like, if I just want to get paid my APY and liquidate it straight away, everyone was, or a couple of the guys in Texas who were doing this were just like, well, yeah, you can just convert your meme back into ETH or whatever, and then get liquid again. But these guys were not doing that, and they were linking and linking, and they were going and staking the meme on another network. So they were just like leveraging everything to the hilt. And in a way, it kind of makes you think about traditional financing, and does this sort of crap go on in traditional financing? And I'd probably say no, but I mean, I think the whole crypto staking space is really the Wild West at the moment, and it's got, I think, the moment net it's giving the space a really bad name. When the feature set and the functionality that you can get on DeFi is incredible, but what people are trying to do at the moment is basically just fleece everyone with that.
As in crypto, the whole space, I think ever since it even remotely started to become mainstream, sort of circa 2017, everyone's just jumping on the concept of a get rich quick scheme. And I mean, I'm guilty of it. I go and look at different, yeah, I've looked at different staking opportunities or different, when before I got involved in the Node project, and it seems crazy that you'd look at something that says, oh, this returns me 40% per year. I'm thinking, oh, that's a bit low. I've seen much higher numbers somewhere else. Whereas your traditional sort of index fund, you're lucky if it's returning you 9-10% a year, and that's still great. You can still get incredibly rich off of doing that. But you're looking at these what should be ridiculous numbers, and you're saying, no, I want more. And I guess it's a greed factor.
Yeah, yeah. Well, so if we kind of sidestep the crappiness of it all right now and kind of look to what is their nirvana, like where are we going with this? I mean, are we getting to like a Ready Player One state where, you know, you have these highly valuable, you know, kind of tools and weapons and all that stuff? I mean, how far away do you think we are from that metaverse sort of commerce level?
I think, well, yeah, and I think gaming will definitely be one of the first industries to explode in Web3 because of the economic capability, how many billions, trillions of dollars pass through the gaming industry every year. But I could also see it quite quickly spreading into other things. Take, for example, when the advent of online shopping first sort of kicked in, and the concepts of, no, you don't go out to a store and you buy something, you go online, you go to Amazon, you order your book. What happens when the next evolution of that is, I don't need to go and sit down at my computer or open my phone. I'm going to put on my smart glasses that companies like Meta and Microsoft and whoever else are developing. You get to a point where they're mainstream. I'm going to put them on, and there's going to be an augmented reality metaverse around me where I'm going to get a pop-up of, oh, okay, this is Amazon. I'm going to go in there. Yep, click, click, click. And I think that kind of a world is most certainly possible. How quickly we get there, I'd be interested to see how far we can get in the next 5 to 10 years. But then I think everybody thinks there's going to be a kind of a cliff drop-off point where one day we're not there, one day we're there.
Yeah,
I think it's going to sneak up on people a lot more than they're expecting it to, and it slowly pieces into your home.
I think it's like electronic vehicles. You know, there's not going to be one day you wake up, walk down the street, and all the cars are electric, and we're living in this kind of like, you know, wonderland of electricity and non-carbon. Yeah, for me, I think it's another 20 years till it's ubiquitous in a way. But okay, just to finish off, then, I mean, where do you think the best investments are right now, or is it staying in cash?
What's your risk appetite? How willing are you to get up in the morning and
Conservative.
look at well, then traditional investments, index funds? How willing are you to get up and look at your crypto portfolio, for example, and it's down 10% there, 20% there, because Bitcoin's taken a bit of a tumble overnight and it leads the way. Yeah, what are your aspirations? What are you aiming for? How big of a payday in essence are you aiming for, which then theoretically dictates how much risk you're willing to take on, and then are you willing to sleep at night being heavily into a lot of these crypto projects that are going to go up? I mean, the Thor, for example, it's down 3/4 since I bought in, because I rushed, and I'll hold my hands up and say it was FOMO. I thought it was about to shoot, so I bought in and it did not shoot. But I'm fine with that now because I can see the 6 month, 12 month, 18 month roadmap, provided everything goes well. So are you able to step back and assess that?
Yeah, it's, you know, I talk to a lot of people who are interested in markets and have pension positions and whatnot, and they, like, you know, like everyone else, they see, oh my God, you know, on the national news at night, oh, the markets are down like X amount, or they're up X amount, or oil's going crazy and da da da. But they seem very interested to keep the conversation going, but and they want to be super active. But the reality is that unless you have the ability to work it the way we do day to day and trade and monitor the markets day to day, it's going to drive you crazy trying to track, you know. And so, I mean, for my kind of investment and pension portfolios, the average outlook I'll have would be probably 5 years, 10 years. The main outlook is a 20-year outlook. So I'm perfectly happy to commit capital for a 2-year outlook. Like, you know, we talked about the drillers this morning, you know, and that's kind of my slow and safe and steady stuff. But then you know, for people who kind of see oil's up 10% today, you know, that's, you got to be trading these things every single day. So we'll leave it there. Interesting chat, and I'm sure we'll have you on for a chat again soon, and see how you're doing.
Sounds fantastic. Thank you very much.
All right, thanks a million, and yeah, all right, take care, and we'll talk to everyone soon. Cheers. Bye bye.